So I'll discuss the current scenario, whether we should invest in Indian equity or not, and what we should do at this juncture. That should be my topic today. So the title is threat or the it's a real threat. This is a we are all know that there is a geographical instability is there. It is really a threat or a wealth creation opportunity. Vipin, the slides are visible, right?
Yes, it's clear and visible.
Yeah, so this is a disclosure. I'm not a SEBI registered research analyst. So this presentation is purely for educational purpose, and never invest in any stocks or mutual funds without proper research or your own without or only invest after your own research and conviction. So this is one of the paper which was published in Economic Times few months back. So from 1 lakh high to 2-year low. So we were expecting the Sensex to deliver, say, up to 1 lakh, but to 2-year low. The Sensex delivered zero returns in the last 2 years. So this may be reflected in our portfolio as well. And many people, usually in 2021, I used to get a lot of calls. Then there was a euphoria in the stock market in 2003 and 2004. So 23 and 24. Then in 24, there was a peak in the September. And after that, there is a decline in the stock market price due to many reasons. So in the meantime, if you look into the last 2-year gold price, then everyone, so in 2021, 2022, 2023, I always preached you should not invest a lump sum of amount in gold. Okay, you can have a small amount of exposure, but your major investment in it should be in the equity. But if you look into the last, 2 year, you can see from 2024 to 2006, so the year till date, you can see that almost the gold price has surged 2 times. And if you look into the silver price, it is actually exponential growth. And it's almost 3 times in 2 years, although there is a decline towards the end. So everybody is saying that, okay, I should have invested in gold. Okay, Cecil, you went wrong. Okay, you always insisted for equity. Now the gold has given very good returns in the last 2 years. Silver has done really well. And you were wrong. And if you have not, and Sensex has not given any returns. So I will take you through the history. So many of you, if you look, and many people in the crowd, I feel that a substantial number of people might have started investing after the COVID. So in the 2021, there was a threat to our life, and people were all sitting at home and doing work from home. And then everyone needed a mobile. So most of the mobiles, so the components and the manufacture in China, including the Apple. So later this was shifted to India. So that's how people have realized that, okay, there is a concept called China plus one. We should not depend wholly for raw materials and for the electronic manufacturing in China. And there was a shift from China plus one strategy. In India, partially gained from that. That is one of the beginning of an electronic manufacturing. Electronic manufacturing became a good this for the economy of India. Then companies like Dixon benefit a lot from that. Then everyone was at home. It was a Zoom meeting was a norm, and everyone was conducting meetings from home. So all the IT companies did well, and the cost of the IT companies went down because there was no need for any electric charge, and then electricity, the air conditioning, everything come down, and it really became, and the profit gained, and we export a lot, and India became a hub for all the medicines across the world, especially for US. There was a surge in global liquidity because there was printing by the central banking, and a lot of money came in the Indian equity market. And it was a good surge in the market, in markets across the board, in all sectors from 2021 till 2024. Although there was a dip in 2022 to the Ukraine war. So after this 2000, the euphoria, there is a correction, and it cannot go in a straight line. And although the China plus one strategy really benefited India, but the most countries really benefited include the Taiwan, the Vietnam, the Korea, and they all really benefited based on the chips they produced. And for the last 2 years, they have really they have doubled. If you look into the Korean stock price, the Taiwan, they all surged almost 200% in the last 2 years. And India was not really in the forefront of the AI race. And there was earning pressure in many countries, corporate earning pressure towards in September 2024. And there was an overvaluation due to the liquidity surge. And due to this, all this pressure, the foreign institutional investors then took money and they started investing in China, Korea, Taiwan, Vietnam, because they found that they are all cheap. And the China was very cheap. The PE was 7, and we were having a PE of the 20. So people really realized that, okay, there are a lot of cheap markets available in the world, and India is one of the emerging markets. They withdrew money because they were made huge money from 2020 to 2024. And in 2023, central government came with the new tax regime, long-term capital gains tax, raised from 10% to 12.5%. That was also a hit for the Indian market, and the currency was also facing some problems. So this was a real concern. This is why we went wrong, and the emerging markets really did well. The Korea doubled, the Taiwan doubled, the China was up 50%, and India was the only economy which was not performing well in 2025 and 2026. So the people became very panicked. Okay, now whether we should invest in gold, whether we should invest in silver, or we should totally exit from the SIPs and totally exit from stock market. Okay, is it really worth investing in that? And because India became a worst performing market, and in the Indian currency, the rupee became the worst performing currency in the world. And this became worse during the war. Okay, it was like the real concerns during this war was the depreciation of Indian rupee because of three major things. One, the oil import. Okay, the oil price surged almost double, becomes from 60 to 110, 115, like that. Then there is a high import of gold because India import around 700 to 800 tons of gold a year. And that's number one. And we were all trying to export the semiconductor, but we were importing all the chips, semiconductor chips. Because of this, there was a $150 billion impact in the current account deficit. And this also really impacted in the stock price. And next thing is, so if you look into the gold, the oil price, you can see that the oil price, it was, if you look in the last 6 months from 2nd December 2025 to 28 May 2026, that's today, you can see that there is a 52.6.5% increase in the oil price. And we 80 to 85%. So we import our required oil. That is one of our real concerns. The second thing I really want to emphasize is regarding the gold investment. Okay, although the gold has rallied a lot in the last 2 years, but this is mainly because the central banks are buying gold as a reserve. Okay, the main difference between central bank and a retail investor like you and me is that the central government is buying gold as a reserve. Okay, it is a defensive tactic. It is a de-dollarization concept, and it is not for any returns. But the retail investors, we invest in gold not as a reserve, or not as a defensive tactic, not as a de-dollarization tactic, but it is mainly for returns. That's the difference between the approach of gold investment by a central government and central banks like RBI or central banks in China. They are the largest buyers of gold in the last 2 years. And the price has gone from, say, higher like 70 to 80 billions of dollars, like this, from $55 billion a year to 70 to 80 billions of dollars a year. And this has really impacted the Indian as well. So, and I was saying about the bad things about India from 2024 to 2026. But there is two sides of the coin. And is there any opportunity? Okay, many people believe that, okay, most of their portfolio is in red. Okay, whether it is worth investing in stock market for the next 2 to 3 year period, or shall we exit whole and put that money in gold or invest in, say, some other assets, or then you keep park the money in an FD. That is the concept which is slowly going on. But I'm a strong optimist in about Indian economy, because India is a structural story. Okay, the next decade belongs to India. India is the only country which is the only country which grow the GDP at a rate of 6 to 6.5% a year. Okay, it is no country in the world is growing at this pace. India is the only country, and it is having a demographic advantage. The largest young population is in India. There is earlier, India was basically a consumption. It is based on the consuming economy, and now we are shifting that to manufacturing shift is there. There is a strong infrastructure boom is there. And you and everyone, we are all listening because there is financialization of savings, and many people are coming into the stock market. And actually, the retail investors are keeping the economy now, because due to the investment through the mutual funds and SIP, there's a strong digital transformation in India. The banking sector, which is the backbone of any economy, is in the best shape, because the NPA, the liabilities are less. All this bank have clearly cleaned up the liabilities, the non-paying assets they have cleared. So they are in the best position to have a next leg of growth. And valuation is also very cheap. Although the foreign institutions have withdrawn the money in the last 2 years, I'm sure they will come back, but they may have to pay more because it will be at a higher valuation. So in 2 years, we have not done anything. But if you look into the last 20 years, the Bombay Stock Exchange established in 1979, and till this 2026, it has given around, say, compounded annual growth rate. CAGR is around 14%. But you look into the last 20 years, it is around 12%. That is mainly because of two dip. That is, one happened in the COVID, and this is the new dip. That is what we are seeing in 2025, 2026. This is my concept. The volatility is the entry fee for the long-term wealth creation. If the market is on a straight line, we will not be able to enter because it will keep on going, the market. So there should be some volatility. That is what the best time to buy good stocks or the mutual funds for long term. So that is one of the important things we need to understand. I have a passion of watching the new buses or trucks, which is this one in the road. This is a new Volvo 9600. The bus is already in the route. So the bus which was present in 2024, it is the market price are same in 2026. And this bus is waiting for you and me for the last 2 years to get in. So this bus may stay for another 3 or 4 months. Then we can see that there will be a huge growth in Indian economy, but this bus is staying for you and me. And I personally believe that this is the best lifetime opportunity to put the lump sum of money or SIP in the post-COVID. And this is a lifetime opportunity. Everyone said that the market did well from 2020. Anyone who invested in 2020 really benefited. And that's the same situation. Okay. When I was in the lockdown period, okay, I realized that, okay, this is the first announcement. The electronic manufacturing sector is going to boom in India. The first time I invested in Dixon Technologies in my wife's portfolio, that was in 2020. And now if you look, it was initially when I invested in September 2020, it was 177. This is almost, it hit around 18,000. It became 10 bagger, and now it has come down. The school, because of the high valuation of this technologies, this company. So because if you invest in good companies now, really we are going to get good returns like this in the future. And I realized that, okay, everyone is sitting at home, then there is a need for electricity, that need wires. So I searched which is the best wire company in India. And I realized that Polycab is the best. So I started searching the Polycab. I entered the Polycab. at 940. Okay, 940 in 2020. Now it is trading at 9,006, almost 10 times. Okay, it has given huge returns in the last 4 or 5 years. This is how all opportunities are lying ahead. Okay, and always we need to understand that we have to be optimistic. If you are a pessimist, you think that you cannot get good things in the front in the future, never invest in stock market, and it is not for you. And it is only for the optimist and the people. Every opportunity, every problems, every crisis in our life, it is an opportunity. Please capitalize that, and always you will grow. You will grow, and you will do better. It is an opportunity. Only optimists can survive. India is a long-term structural story. There will be short-term challenges will be there. It will not be a straight line. And don't work only for money, because everyone is very hardworking to get the monthly salary. Okay, and don't work only for money. You make your money work for you when you sleep. That's very important. Unless you don't know how to make your money work when you sleep, then you will be forced to work till the end of our life. So let your money work for you. And wealth creation is usually slow, disciplined, and patient, and it is not instant. Okay, you cannot make money in one overnight. If someone is saying so, then that person is misguiding you. Very simple. You take very simple steps. One, always assess your risk appetite. If you feel that you cannot see the volatility in your stock for the next 20% or 30%, it's not your territory. Never invest in stock then. Okay, you should not invest in mutual funds or these stocks. Okay, it is not for you. And the simple advice I have is that you stay invested and never stop your SIPs. Okay, if you are investing in SIP in mutual funds or SIP in stocks, please continue to do that. And if this is a good time, buy more when market is down. And another small suggestion is that stick on to mutual funds. You cannot track the individual stocks. If you have 10 stocks, 15 stocks, 20 stocks, 30 stocks, 40 stocks, whatever be the stock you have, you need to stock individual stocks. You need to track them. You have to listen to their conference calls. You have to analyze their quarterly results, how the company is performing, whether it has relevance for the next, what are the hurdles that my company is going, because equity is ownership. You are also part of the company because you are also running. You are entrusting someone to do business for you. It is equity ownership. It is like you are having a factory. It is like you are having a shop. Okay, so it is ownership, and it is not gambling. It is science. Always you should know the positive things and negative things about your company. If you cannot track, you entrust that to the wealth, manager. That is the mutual fund house. They will do the good job for you. If you never think that all the good companies are not doing well. So if you look into this is the GE, that is the Indian version of the international company called GE Vernova. This is mainly involved in the transmission of the power transmission in India. Many good companies are there in that space, like Hitachi Energy, Siemens Energy. Then you have the ABB. That's all are there. But I am giving one company. So this is 1 year back. Okay. So when I started investing, so this was 1 year returns is 1.127%. But even in this crisis, many companies did well. So that's the point I want to highlight. And the IT consider around 30% of the index. Okay. But we need to understand that now we have a negative thought process against the Indian IT companies because they are not in the front of the ARIs. But if you look into the persistent systems, this is one of the mid-tier, the IT company. I like this company a lot. Disclosure, I have invested in this company. And this company, if you look into the 5-year returns, it is around 310. That is around, it has given good returns in the last 5 years. But if you look into the 1 year returns, it is negative minus 8 point. That is around 20% down. So if you have to study this company, then try to invest in this, then you are going to get good money. Another concept I have is okay, when I was having Indigo. The moment the Iran-Israel war started, the first thing I did was I sold my Indigo, because this was one of the company where it was based on the crude oil. The crude oil price was going up. Naturally, it fell down, but it is minus 23% in the last 6 months. I'm sure this will come back. Okay, because that they enjoy around 65 to 70% of the total market of the Indian market, and Indigo is the best airline in India. Although the aviation industry is not an industry to invest for a long time, but we need to understand that okay, Indigo is going to have going to have a good growth based on their domestic and international growth. My simple suggestion: stick on to the mutual funds. Okay, if you cannot track the stocks, very simple. There are a lot of tools available now. That's a reverse SIP means you can calculate. So you want say 1 crore rupees and how much you want to invest in a particular period. Suppose if you want 5 years, if you want 1 crore, they will give this much. You have to invest. Right? If you want, you can make this in 1 crore in 15 years. This one. Setup SIP means you increase every year. You increase, you get increment, then you have DA. So definitely you increase 10% of your investment every year. That's called step up SIP. So reverse SIP is very simple. Okay, so you do one thing that is very simple. The first goal, any person and those who are listening should have a 1 crore in next 15 years. If you can invest 15 years in an equity mutual fund, which is likely to give you 15% returns, then within 15 years, you can make 1 crore. That should be our next goal. And that 1 crore becomes 2 crore within the next 4 years. That's the power of compounding. Okay, then always try to do a direct investment because that will save you a lot of money. I will give you an example. So if you can invest say 14.77 in 14,077, that is 14,000 that is in 14.77K in every month for the next 15 years, you will have 1 crore if you invest in 15% mutual fund. Okay, that's very simple. And there are calculators for having 1 crore in 10 years, 1 crore in 5 years. The amount is very high. You need more than this. If you want 1 crore in 15 years, it is 14.7K. But it is almost more than double if you want that same in 10 years. The basic principle is that youngsters, please start invest very early, start an SIP in a mutual fund. This is going to reward you a lot in the future. Another concept is called the step up SIP calculator. So I will give you an example. So if you give 15, 15, 15, then it is 1 crore. If you start say 17,500 rupees every month, annual step up in 10%, and you can reach the same goal in 12 years. Okay, that's the beauty of step up. Then I'm coming to the last part of my lecture. These are the 4 slides. These are the most important 4 slides of my presentation. 1, never go by tips and rumors. Okay, if you will say that everything India is going to have crash, please sell everything. Okay, the people will keep on saying many things as if there is no tomorrow. Okay, please avoid this. Please tips and rumors. And there is always a fear of missing out. So that's called the FOMO investing. Please, I have missed many companies. To be very honest with you, I started looking into the power transmission sector from 2021. One of the best companies which has performed in the last 6-7 years is the Hitachi Energy. Okay, one of the beautiful compounders. But always I thought that this company was overvalued. And still the company is overvalued. But I didn't invest in 2021. I didn't invest in 2022. I did in 2023 and 2024. And still I didn't invest because I realized that this is having an overvaluation. And many people will say that, okay, I have done this much invest in this company. So they might have entered in the same company 1 year back or 1.5 years back. By the time they might have made good amount of money. And now we are entering at the peak and there will be a correction, time correction, or any bad about the news about the company, there will be a transient dip. Then we will feel that, okay, this is not really working for you. And people now after 2020, many people the youngsters have done this investment as a trading and there is an addiction. Okay, they do it as like a gaming. Never do that. Okay, only very few people have made money by trading. Okay, be an investor, long-term investor rather than a trader because it creates a lot of stress you have a full-time job, and you cannot do that when you between 9:30 to 3:30, because where the trading occurs. So you put SIP even in stocks or mutual fund, just make that do in once in a month by swiping. Then that's it. That's a simple way of doing that. If you are investing in stocks, you quarterly evaluate them. If you're doing mutual fund investment, you evaluate once in a year. Okay, never do two. One of the important things, one of the important mistake is that you keep on checking your returns every day. If you invest in a mutual fund, never do that. You do only once in a year. And chasing good quick money, and if any bad news, people will start selling during crashes. That's the worst thing. Never do that. Okay, if it is a good company, fundamentally strong, keep, and sector is very good, and then definitely you keep. There will be a transient dip, and if there is a dip or there is a crash in market price, definitely you buy more if possible. And small thing is that never buy luxury things by hard-earned money. Okay, suppose if you want to buy a Benz, never buy from your salary. That's the worst thing you can do. Never do that. So you make money from some other source. Okay, then you make money for work for few years, then you try to have a Benz. Then otherwise it will become a liability. You will not be able to maintain that. And please avoid all loans. That's my personal advice, except home loan. Or never buy a car. So if you want to have a new car, okay, that's fine, because it is required for your job. But if you want to change the car, or if you want to upgrade your car, always you plan well in advance, 1 year or 2 years, make some money, put aside, you do an RD, recurrent deposit, make some money, and then avoid a loan. Always have an emergency fund, and please have a term insurance and medical insurance. And for you and for your family, these are basic things you should do. And otherwise, you may have to redeem your stocks or mutual funds to take care of emergencies. Never leave money idle in your SB account unless it is an emergency fund. And I come across many people having 50 lakh rupees, 1 crore in their SB account. And they are not giving any interest. Either the bank is not benefiting or you are not benefiting. So never leave your bank money idle in your SB account. And this I have already mentioned. And always people think that I'm investing in policies like LIC, ULIP. Please never do that. And your life insurance policy is not an investment. It is an insurance policy. Investment and insurance are separate compartments. Never mix these two. Maximum investment should be in equity. That's going to be the future. Always you should have a goal-oriented investment. Suppose if you are investing, say, 10,000 rupees, you should have a goal. So after 5 years, this money will be utilized for this particular purpose. Always you top up your investments. Last slide, I think, always do a direct investment. After you generate a corpus, then you do a systematic withdrawal plan, limit number of mutual funds. Many people have 15, 20 mutual funds, and you are giving the money, unnecessary money for all the fund managers. Never do that. Always understand the tax implications when you redeem the money. Avoid sectoral funds or new fund offers. Mutual funds, always you check once a year. SIP basket every 3 months. That's the last slide. Please have some exposure in crypto. Please have some exposure. I suggest maximum 5 to 10%. Never above beyond that. It's a highly volatile structure or highly volatile asset. Please use some good apps for investing in India. Then please invest in the main crypto, that is like the Bitcoin, Ethereum, Solana, rather than the new coin offers or highly volatile. If you ask me whether Indian equity is going to do well, whether it is a threat or opportunity, my simple answer is it is a lifetime opportunity. Thank you very much for your patient listening.
Thank you. Thank you, Dr. Cessal. It was a very informative and simple session. And many members will be having doubts. You can whether any is there anything in chat box?
Okay, Vipin, I will check. Okay.
Because there was a
how to evaluate a company. Okay, sure, shall take up during that. Okay, that I will check that first. Please type points. Valuation of stocks. Okay. So whether a stock is overvalued or undervalued, it is based on the sector. Okay. And never say that one sector is having a high P, other sector is having low P. No, it is only should be compared with the peers in the same sector. So how you select a company is that, okay, how you select a company is that, okay, if you want to invest, whether this is going to do well. I will give you a small example. Okay, the main thrust we have is main thrust is the concern is that the oil price. The oil price is high is a concern now. So this is going to have an impact in Indian economy. So what is the alternative? Alternative is that we should have another source of energy like renewable. So then solar is going to do well. The wind is going to do well. So the companies which are involved in solar companies are going to do well. So that's how you select. Okay. Sometimes it may be a bit overpriced. You always look into the valuation. Now, what is the future? What are the earnings we have? And each quarter, what is the order book? What is the corporate governance? What is the competence? And what is the integrity of the management? And this all we need to look then when you invest in this one. Yes, the great lecture, Cecil. Thanks, please. How to invest in foreign markets. Okay. So one of the new questions which I face is that why you need to invest in the foreign markets. That's a real concern. Okay, whether we should put all the eggs in one basket or whether we should have an exposure in US, because most of the time people ask whether we should invest in US stocks. Okay, there are good points and negative points are there. There are a lot of good points. One, it is a diversification. That's number one. Second, all the new technologies will be from US. Like if you look into the data center, the artificial intelligence, the semiconductor, the chips, all they are going, the Nvidia, the Amazon, the Microsoft, the Alphabet, Google, they are all going to do well. And they have made a lot of investment for the future in artificial intelligence. So if you invest in US stocks, definitely you are going to benefit. And this can be done in many ways. One, you can directly invest in US stocks. That's number one. Second, by the platforms, like there are different platforms are there. Second, you can have the ETFs in the US technology ETFs are available. Then the restrict, as far as I know, there is no restriction for Indians to invest in US. That's applicable for the government employees also. And the income tax details, I will share the slides. Okay, how to value stocks once you select a stock. Okay, how to value once you select a stock. So the selection should be after the value. So I will give you an example. So I was searching the solar, okay, very recently, because solar is going to be, and other things in the future, it is going to be nuclear energy. Okay, nuclear energy is going to be a new theme because all the data centers need a lot of electricity, and this cannot be from the grid itself. We may not be able to provide, and definitely one of the strong solution is that to have a nuclear energy. So that is going to be another theme in US. This has already become a new one, and companies which are doing uranium manufacturing, and these are going to explode in the future. And this one, how to value comes once you select. Okay, then in the solar, then you look at the different companies like Premier Energy is there, Suzlon is there, then you have the Tata Power is there, you have your other companies like Vari Energy is there. Then you can select in the energy which is given, there's transmission is required. So wires and cables companies like Polycab, Apar Industries, then meters, transformers and rectifiers companies. A lot of companies are there in the entire value of chain. So you select which you can understand. Towers, everything is there. The meters are there. Switches are there. Gears are there. Cooling system is there. So and power backup, so a lot of things we need. And so you select, you read, then you study the company, and you can do the valuations either in ticker tape or in screener. Then you compare, you screen that. Then you study this company. A lot of YouTube videos are there. Never trust every video, but you look into that. Then be convinced. Okay, Vari Energy is the largest solar panel makers in India. Okay, this is going to do well. then you look into the conference call, say that they are going to have, this is the order book, and okay, this is the PE and or the PEG ratio. So most important valuation. So those who have, it may not be needed for everyone, but the valuation really is my simple strategy is that you look into the PEG ratio. PEG ratio less than 1 is less than 1 means it's an undervalued company. And in a good sector, then you, if other things are good, then definitely other parameter which really helps to select a company is that what percentage there is the foreign institutional investors and domestic institutional investors are invested. Suppose in the last, say, few quarters, the domestic institutional investors and foreign institutional investors are increasing their stake in that particular company. Definitely, you need to know that the smart money is going there. And definitely, you chase them, definitely you are going to get a lot of money. Then that is how value stock. Then the scope of investment in gold and at this moment. Okay. I'm not a fan of gold and this one silver, to be very honest with you. This, if you look into the last 3-4 months, you can see that even in the volatility, in the war, usually that's the aim. That is a situation where the gold is going to do well, because the gold is mainly is a de-dollarization, like it is as a hedge, it is as a reserve. That is how the gold price has gone up. Okay, so if that is whether it is going to go up, I won't say that it is not going to go up, but it is not going to go up in the way they did in the last 2 years. That's my personal view. Okay, I am not an equity man. I do not believe in gold. That's my personal view. Okay, I do not invest because equity is going. If you take 5-year, 10-year horizon, definitely equity is going to do well compared to gold. But if you look in the last 2 years, it has done well. But it doesn't mean that they are going to show the same growth or the same in the next this one. Yes, very good. This is Indian family. This is similar Indian family with 45 expense debt. Okay, instruments in circulation globally issued by a family running of deficit. I totally agree with there is a deficit. I totally agree with you. That's a very good comment by Shabir Ali. Okay, I totally agree with you. But we have to be very optimistic. If you look into the largest country the debt is $39 trillion for the US economy. That's a debt. As of compared to that, India is having in a strong position. And I agree with that there is a debt. Okay, totally agree with you. But there is always a concern. But we are going to do well in the future because all the macro is our inflation is under control. Even if you look into the percentage of oil and the gas price hike in many countries like UK, it's around 30 to 40%. But we have not experienced that in India. And that's one of the stability we have. And that's one. Second thing, all the inflation is under control. The interest rates are low. We have a very good current deficit is there. And there are strong signals for growth. Corporate earnings are coming up. If you look into the last quarter returns, they almost 400 out of the 500 large companies in the company have given their returns. They have come up with the quarterly results. And almost you can see a 12 to 13% increase in their corporate earnings. So that's a good sign. Like India are going to recover in another next 2 quarters. Then thank you very much. Such a good class. Best Android apps for trading. Okay, and recommendation for crypto. Okay, for the mutual funds, I suggest never go buy securities because that's going to charge you. You make simple apps like Grow, Coin by Zerodha, then by Angel One. These all can have free direct mutual fund investment. Or you go directly into the mutual fund website, then you can directly after a KYC, online KYC, you can do that. For crypto, I'm using Coin DCX. I had concerns with Vazirex. Okay, I'm using Coin DCX for that. Okay, that's a SIP or SIF. That's also a good thing, which is better. I prefer to have an SIP rather than SIF. Then PowerUp, that is PowerUp is good for evaluating the mutual fund investments. Very good. how to do a position sizing and suggestion regarding selling. Okay, how do you do it? The biggest the problem in the equity investment is selling. When to sell it? Everyone will say you buy. Okay, that's the right time to buy. No one will sell you that when to sell it. To be very honest with you, I'm also learning the art of selling. Okay, I'm not saying that I have really know, because the main important thing is that how I look is that, okay, I have an expectation that, okay, this company is going to do well in this particular situation, but it is not performing well. Maybe due to higher valuation, or maybe their focus have changed. Okay, and or they are, because suppose if the paint company have started a lot of competition. Okay, to be very honest with you, the Berger paints and the Asian paints were the darlings in stock market in the last decade. But for the last 5 years, the Asian paints or Berger paints have not given any returns because of the strong pressure from the Birla company they come with a new brand. So there is a strong competition is there. I won't say that this will come up, but you have to look into the each quarterly results. And if you see that 2 or 3 quarterly results are not giving good returns, so to the tune of around, say, sales growth around 12 to 15%, or earnings profit after the profit to 12 15%, then you look into the order book of the company and there is any change in the confidence of the management, definitely you should exit that stock. Second thing is that, okay, if you feel that, okay, you have reached the goal. Say, I wanted to invest in, say, company. Say, for example, I've invested in a company called Federal Bank. Okay, good banking stock in the mid-tier space. And it has given, say, 200% returns in the last 2 years or 3 years. So that's how I achieved my goal. Or I want to utilize that money for something else. And you find another opportunity. Then you exit. That's it. And positioning and the sizing, that's also very important. So if you say, for example, we are all believing that we are all going to have the digital investments in the future. So from the gold, the real estate, everyone is moving to the SIP, equity investment, crypto. We know that all the companies, all the exchanges are going to do well, like the Bombay Stock Exchange. Okay, so in the last 1 year, it has given around 100% returns. In spite of all these hurdles, it has given very good returns. If you look into the MCX, the commodity exchange, it has given very good returns. And instead of investing in gold, I suggest MCX. Or you invest in, say, the gold renting companies like Muthoot Finance. They are going to do well. So always there is a proxy play rather than investing in the gold or silver. That's one point I want to make it. And the positioning is also very important. So if you are convinced about a particular stock or a particular the sector, definitely you give more emphasis to that sector. Okay. So if you believe that, okay, say IT is a contra bet, okay, you restrict the percentage of your investment. But you know that the renewable energy is going to do well because that's a shortage. The data centers are going to do well. The semiconductor stocks are going to do well. And the financiation theme is going to do well. The health sector is going to do well. And we are going to, the CDMO companies are going to do well. So always you invest in that. Then you always try to be with the boss. The company should have a monopoly business. There should be a barrier to entry. The company should have a pricing power. You keep investing in that companies. Is it advice in small or micro caps? Okay, that's a good, this one. Be convinced they are going to have a volatility. And if there is any pressure, they are going to tank first. But when there is a recovery, they are going to recover fast. So my thought process is very simple. I never look at whether it is micro cap company, whether it's a small cap company, whether it's a mid cap or a small cap, large cap. I always look at whether it is a monopoly business, where it is a barrier to entry, there's a moat business is there, the company is having a pricing power, it is in a good sector, and the company is reasonably valued and having a growth potential, then you invest in the company. But be ready for volatility if you go buy small caps and micro caps. I believe even if you buy a small cap index, you are going to do well in the next 2 to 3 years. Or micro cap index, you are going to do well in the next 2 to 3 years. So whenever America went down in 2000, 2008, and India went down even further. So when American debt problem surfaced, let's shoot up how Indian corporate will perform. Okay, this is a very good question. If you look into the American crisis, and when they recover, so we agree to that, because the important thing we need to understand is that we do not really depend on US for our economy. So even if they put a lot of tariff, it's only going to hurt at 2% of the GDP of India. That we need to understand. Which is mainly it is basically based on, we never had any Microsoft, we never had any Windows, we never had any other gadgets like Facebook or any other cloud business. We never had any of this, but still we had made, if you look in the last 20 years, 25 years, maybe the percentage of growth between Indian companies, stock markets, and the indices of the US is only 1 or 2%. We have done very well in the last 20 years, and we will continue to do well. We will continue to do well because all the basic factors, the fundamentals are strong for India. I have a video, majority of some questions from my 21-year-old research is global macro situation. Please have it. Very good. Thank you. With the inflation, beef, chicken, onion going up, 7% American energy going to data centers already. Okay. So we can all think like that. Okay. Never think the whole world is going into recession. 2 years back, the people thought that the whole world is going into recession. Okay. But everything is dip. These are all dips are transient. We will come back. We will bounce back. And India may be the only country in the whole world have this stability to come back very well. And India have a very strong political stability. I'm not for any party, or I'm not for Congress, I'm not for BJP, but I feel there is a political stability is there. Only two people can ruin the whole country. One, people who are uneducated, totally illiterate people in the top. Number one. Number two, total corruption. Corruption is there in India, but still we are managing to have very good returns. Yes. Do you think the technical charts do aid in term? So technical charts are good mainly for short-term investments, swing trade. These are going, the entry points and exit points are really needed. But if you are a long-term investor, say if you are aiming, say 500 rupees is your target for a stock who is having 50 rupees now, even if you invest in 50 rupees now or 55 rupees now or 60 rupees, it's not going to do, it is not immaterial. Like, okay, it have only small impact in the long term. But if you wait the stock to correct from 50 to 40, then you may not be able to catch the bus. It will be immediately become the 60 or 70. So I don't know. The most important thing we need to understand, the high bottom and the low is only for fools. Okay, be a very simple man. You invest, okay, not overvalued, reasonably valued, and then stay put and stay long term. You evaluate the companies once in 3 weeks, you are going to do well. Do you think the technical chart? Okay, that's I have answered. From 2009, there was a tech boom. Yeah, everything. So every year there is new theme in India is going to have. So if in 90s to 2000 it was the TCS, the Infosys, the HCL Technologies, they are all doing well, and they went to the roof. So all the PE multiples went the roof, and this Infosys now is trading at PE of 9. Okay, and TCS for the last 20-25 years is trading at very low PE. Okay, doesn't mean that you should invest in that. So every sector, every time you need to have a sector. Okay, so now we don't know which is going to be the next leader. So in the last 2000 to 2024, if you look into the best sector was like railways, the public sector companies did well, and the railway did well, defense did well. And now we need to have, so if you look into the last 1 year, the public sector banks have done well. SBI, Canara Bank, Bank of Maharashtra, they all did well. Okay. Yes, so very long economic cycle ends destroyed wealth. Okay, I totally agree with the history, sir. Is there any difficulty in delay in closing the SIP withdrawing a huge amount? Like, is there any difficulty in delay in closing an SIP? No. If you put an online SIP, there is an option of termination. Okay. Or if you have an SIP, say withdrawing a huge amount, nothing. So you can, if you have 1 crore, you can withdraw the whole 1 crore in one shot. That's one request, and that will be deducted to your bank account, say within 5 to 7 working days. Yeah. Why banking and IT not doing well? Can we bullish mention few stocks buy both? Okay, IT is a contra bet for me at this juncture because the large IT companies are not going to do well. They are not really. They are finding it very difficult to pivot at this juncture. I believe that the mid-tier IT companies like Persistent Systems, Coforge are going to do well. Okay, that's my two suggestions. My pick from this two sector is all the platform companies are going to do well. Platform companies like the Bombay Stock Exchange, MCX. You have the Rate Gain. You have the Car Trade. You have the Zomato. You have the PB Fintech, Policy Bazaar. They are all going to do well because the cost involved is very low. The platform companies are doing well. Then the other thing, what about the banking? Okay, the banking financial space, I'm not for the banks. Okay, to be very honest with you, I don't think the HDFC Bank, ICC Bank, the Axis Bank, or the Kotak Mahindra is going to do well. I'm not saying that they are not going to do well. I'm not saying they are going to give you 15% or 20% cumulative annual growth rate. But if you look into the second tier companies like the AU Small Finance, Federal Bank, City Union Bank, they are all going to do well. I suggest from the public sector, my two picks in banking sector, one is Canara Bank, other is Bank of Maharashtra. These are two things I suggest, like banks. Then in insurance is going to do well. So you have a proxy player in insurance like Policy Bazaar because they are selling all the insurance is going to be online. And this is going to do well, the Policy Bazaar. Then other thing in the banking is I say like all the capital companies like all the AMCs, HDFC AMC is going to do well. Nippon AMC is going to do well because Nuvama is going to do well. The 360 degree is going to do well. So they are all going to do well in the future. Even Motilal Oswal, they all have a good outlook in the future. Is there any delay in closing? Okay, good talk, insightful. Okay, anything else? Yes. Okay, I thank all the people who have contributed in terms of the comments. Okay, the positive things, I feel that, okay, there is always a negative things. Okay, you can say in the long run, but always you quarterly evaluate if you are investing in stocks. Please have exposure to crypto, at least the main ones, the Bitcoin, that's going to be the future. If you ask me which is the next internet, that is going to be the cryptocurrency. It is going to be the blockchain technology because that is the future. That's going to be the future. So two major things which are going to lead the whole world in the next decade. One is quantum computing. Second is going to be the cryptocurrency. This is the blockchain technology. Within 5 to 10 years, it is going to be the AI, artificial intelligence, and is going to be the data center stocks, the semiconductor stocks. They are all going to do well. Power is going to be a big theme in the next few, and the financialization of the savings, that's going to be a big theme because that's why we are all here. Then other thing which is going to do well is the health sector. Okay. Yes. Thank you very much for your patient listening. Yeah.
Thank you, Dr. Cessal, for the wonderful session. And we expect another session, maybe after 6 to 7 months, we'll be calling. And actually, it was Dr. Cessal only who reminded me that he is eager to present a session before KGMOA Academic Cell. I specifically thank him for that, and thanking each and every member who have been enthusiastically participating in this session and asking questions. We at Academic Cell promise more such sessions in the future. Thank you. Good night. Thank you, Cecil, once again.
Thank you, Praveen. Thank you very much.
Okay.
Thank you very much.